Well, for decades, alternative investments have helped the biggest institutions and high net worth individuals grow their wealth to extraordinary levels. The average investor is often unaware, or they don't have access to some of the opportunities that the institutions have that produce hefty returns. My next guest is out with a new book that highlights 13 of some of the most successful asset managers who collectively manage more than $500 billion. Life and business strategist and author of the new book, The Holy Grail of Investing, Tony Robbins, is back with us. Tony, great to see you.
Great to see you again, Maria.
Congratulations on the book. And I mentioned during the commercial break, what I really like about what you've done here is you've talked to some of the biggest institutional players out there, and you've taken what they do, whether it's invest in private equity, venture capital, maybe pro sports teams,
yes,
and you've brought it to the individual. Tell me about the book.
Well, it's a third in my trilogy. I wasn't expecting to do a third book, but what happened is I got access to these 13 individuals who rarely do any public interviews and so forth. And these are the masters of the universe. These are people that are managing $20 to $100 billion funds in alternative investments, and they're producing 20% compounded for decades, some of them 30%. These are numbers the general public would never even imagine. But what's happened is, you said, big institutions, pension funds, ultra-wealthy people have had access for years. What they know, something the general population doesn't know. If you look at the S&P 500 as an example, and you say, how's it done over the last 35 years? Well, most of us know it's gone at 9.2% compounded over time. So about every 8 years, you're doubling your money. Fantastic. If you took your same amount of money and you put it into private equity, not the guys I interviewed, average private equity has been 14.2%, Maria. So imagine you're making 50% more per year compounded over the decades. So as an example, if you put $1 million in the stock market 35 years ago and forgot about it, it's worth $26 million today. If you put the same amount of money for those same 35 years in private equity, average private equity, it's worth $139 million. So I got excited because the rules have changed. People can start to get access to this. I want to educate them. And then Ray Dalio taught me some things that we could help people not only get access to perhaps better returns, but also lower risk simultaneously, and that excites me.
Well, that's great in terms of the lower risk, but let's not forget some of these opportunities also come with high fees.
Yes, they do.
So we want to talk about that too, because when you're investing in a hedge fund, you're doing 2 and 20. I mean, these guys are making huge fees from investors. So how does that play into this expected return you're talking about?
That is my most exciting part of this. I was lamenting because, the very best, even if you're available and can do this, the rules have changed. Congress is making it possible so someone can take a test and qualify as an accredited investor and not have to have $1 million. I've always said it's so unfair for the richest people to have access to the best returns. But here's what's really interesting. I was lamenting because, getting in the best firms, they become closed, as you know. They're sold out right away to the wealthiest people, to pension funds. And I was lamenting to a friend of mine who used to work with Paul Tudor Jones, has his own firm, and he said, Tony, you've done so much for me. I got to tell you where I put most of my money. And I'm kind of leaning in because he's really, really brilliant. And he goes, there's this firm in Houston, Texas called CAS. And when he said Houston, I'm like, not New York, not Singapore, not London. He goes, no, they're outside the bubble. And here's what they've done. They've used huge sums of capital, and you don't have to fight to get in these funds anymore. You can purchase and be a part of the general partnership, meaning you get the 2 and 20. They get 2% per year, whether they make you money or not, and they make 20% on the upside, but people are willing to do that because the returns are so amazing. But you literally are shoulder to shoulder as partners. So I am in 65 of these firms where I'm a general partner. I'm not an investor, a limited partner. And then you get access to funds that they've done in the past, the present ones, and the future ones. So it gives you incredible opportunities to prosper just like the people that own the business itself.
Chapter 3 is pro sports ownership.
Yes.
This is one that caught my eye because your average individual investor is not thinking about that,
That's
but
right.
Sports is big money. How am I getting exposed to pro sports ownership?
Well, believe it or not, they've changed the rules. Yesterday in the New York Times, they described the only league that hasn't done it yet, which is the NFL. They're going to discuss this in 6 weeks. But Major League Baseball, the NBA, Major League Soccer, Major League Hockey, all of them have found a way for minority interest to be made through private equity. But they have to have no leverage, so it's a very limited group. They can't own a team of their own. I went through this to buy a team to be part of the LAFC years ago. Huge sums of money and a year to get through it. They now have the ability where you can be involved with, I'm involved with the Warriors and the Utah Jazz, with the LA Dodgers and the Red Sox. And the reason you want to do it is this whole book is about a formula. We all know diversification. Ray Dalio, when I asked him years ago, said that the magic, the Holy Grail, that's the title of this, of investing, is finding 8 to 12 uncorrelated investments that you believe in. If you can do it, you reduce your risk 80% and you keep your upside. Well, sports is uncorrelated. Inflation goes up, they charge more for a hot dog. But today, they're not just out there putting butts in seats. They're media opportunities and they're real estate opportunities. So I'll give you a quick example. Peter Guber's one of my dear friends and partners in some businesses. Peter bought the Dodgers with a group of people years ago. They paid $2 billion to the Dodgers. Everybody in the media said, this is insane. No one spent more than $800 million. Maybe the Dodgers are worth $1 billion. So I went to Peter and I said, I know you're no dummy. What are you doing to pay $2 billion? I mean, I want to participate, but why? He said, Tony, you know, he's made 52 Academy Award nominated movies. He goes, I want to leave you on a cliffhanger here. On Tuesday, make an announcement. You call me, we'll come celebrate. Tuesday, he announces he sold the local TV rights in LA for the Dodgers for $7 billion and netted $5 billion immediately.
Oh my God.
So if you look at the top right now, over the last 10 years, these four sports have averaged 18% compounded over time. The S&P has been 11%. So these are higher returns, and it's in a business like, again, it's a monopoly. Your fans are called fanatics, right? They're multi-generational, so it's amazing to be able to have a piece of each of those, and it's fun.
Yeah, no kidding. Everybody wants a piece of sports. Live sports is where the money is. We know that. And look at the streaming deal that was just announced. Discovery, Fox, Disney, all going to have all these, you know, I mean, that's going up against the NFL network.
Well, if you look at the top 100 shows last year, 92 of them were sports. And if you go to do something at Netflix, you got to spend this fortune to have people, and people can't binge it.
That's right.
The cord cutters still are willing to watch the ads, right? That's the power of the Super Bowl.
All right, private equity, key focus in the book. Let's talk about that, because private equity is an opportunity to actually buy a company, take it private. These big institutions do it, make the necessary changes you need, and then perhaps you get another shot at taking it public again. You say it has consistently outperformed traditional investments.
Every stock market in the world for 35 years, average private equity is outproduced for 35 straight years. So if you can compound
50% higher, you say, in
the S&P 500, 50% higher average private equity, not these guys. And you have access to these guys I explain here. And these are the guys that are doing, most of them 20% compounded or more, some 30%. So it's pretty amazing. But I'll tell you something else. What's really valuable right now is private credit. Because with inflation happening and with interest rates rising, you know, if you have a mortgage in your home and it was fixed rate, you're happy it's 3%. If you're not, you're probably not happy at 8%, right? Well, these business loans, these private equity firms, the banks have shut down a lot of their lending since 2008, and especially regionally recently, problems they have. So now these private equity firms, they know how to value these companies. And so they loan them money. Well, they're the same customers over and over again for them. And there's 250,000 companies between 100 million and 3 billion that need financing. So they provide it. They have less than 1% failure rate. So try this, Andre. Remember in 2021 when people couldn't get any money on their bonds and they're going for junk bonds, 3.9% and taking big risks?
Oh, yeah, big risks.
We were getting 9% on private credit at that time. And now when these floating rates change, things that were 5 and 6 are now going 10 and 12. You have no more risk. And you can own the 2% fees and so forth in the profit of the company. You can actually own a piece of the companies as well.
Wow.
It's pretty amazing.
I like the notion of the book, The Holy Grail of Investing, because you're talking about 8 opportunities.
Yes.
You're keeping it small, you're keeping it simple.
Yes.
It shouldn't be brain surgery.
No.
Creating a portfolio for yourself to save and invest wisely over the long term.
That's right.
So you speak with all these big shots who have done incredibly well. Michael B. Kim, Will Van Lowe, Ian Charles, David Sachs, Bill Ford, Barry Sternlicht, David Golub. Did you take away anything on average that they all believed in? Any commonalities?
Yes.
What did you learn from those big hitters?
Most of them have a specialty. So if you look at Vista, for example, and you look at the impact they've had, they're all SaaS. Right, software as a service. They know that business better than anybody. They can take any company. It's almost like a cookie cutter. They got all the best CEOs. They got all the best technology to shift it and move it. And so they know what they're doing.
Service.
Software as a service.
Yeah.
You know, that would be Vista, and they produced unbelievable returns. Robert Smith is a genius, considered one of the top 50 business minds of this century. Started with nothing, just brilliant guy. So I interview all of them for you, so you hear their principles as well as how to invest in them. But I think I think the greatest combination that I like is when I wrote Money Master the Game, I interviewed 50 of the biggest, you know, Paul Tudor Jones, Ray Dalio, Carl Icahn, everybody, Warren Buffett. What I like about these guys is private equity used to be tear things up and separate it out. It's too competitive now. Now it's all about adding value, which is my way of business, meaning they take a business and they got to figure out how to make it better, stronger, more resourceful, and then sell it to a larger company or take it public. And when things go down, since they've tied your money up for 5 years or 10 years, it's not as liquid. You give that up so you can have a greater return. But what you also have is when the markets drop, they don't have to sell. they can buy then. When the markets rise, they can sell. So they have more flexibility. So their drops have been smaller statistically during these big drops of bear markets, and the recoveries are the fastest. So to me, it's something, why doesn't the general population have it? I'm really grateful to Congress, at least the House. They've passed bipartisan. They're picking it up in the Senate. Hopefully in the next 3 months they'll pass it. So you can literally just take a test. No other qualification should be able to participate.
Tony, before you go, you speak with so many people. If you had to look at the country right now, the world, and identify where the growth is, where is the growth right now that you see in the economy?
Well, I just spent time with Ray Dalio, with Howard Marks, with Jeffrey Gundlach.
Is it a sector? Is it a geography?
There's a huge sector, which is really what you're seeing in the MENA countries, right? You're seeing huge changes in KSA, Kingdom of Saudi Arabia, seeing huge changes in expansion, in those countries that are beside them. The growth is happening there, and they're not wasting their resources on war.
Yeah.
So, and they have resources. People are talking about oil, but oil's going to be around for a while, obviously.
And of course, you talk about it in here, also technology. I mean,
right.
How it's changing things.
That's right.
You said software as a service. I remember Mark Andreessen said, software eats everything.
Yes, that's right. He wrote an entire article about that.
Exactly.
But if you can get in the inside of those things, even with a small piece, you get these extraordinary returns, because this is the part of the tech. It's like AI. It's just growing geometrically.
Exactly. The book is The Holy Grail of Investing. Pick it up. Tony Robbins is here. Tony,
by the way, we're giving 100% of the profits, like all my 3 books, to Feeding America. So while you're helping yourself, you can be helping other people too.
Very nice. Thank you for making sure we understood that. Feeding America is the recipient. Thank you so much. Tony Robbins.